Hey everybody, this is John. Welcome to the free video. So what is the story on the S&Ps? So we have a short-term sell signal. Now, short-term sell signal means it could last 2 days or 2 weeks. Just to give you an example, the last sell signal we got was on June 10th. And generally you got to remember, a sell signal does not mean a market top. Okay, all a sell signal means is that we've reached at least a temporary area of potential distribution. At the minimum, I always look for a reversion to the mean, which frankly we already have. If it gets more extreme, we could go retest the trailing 21-day lows. Okay, if you look at this from that perspective, this is what I would call, and this is of course on the 30-minute chart, we have buy signals. All right. Now, the best trades are when on a 30-minute chart or when they're in the same direction of the daily chart. So right now, you've got buy signals here and sell signals here. So it's a little bit of a choppy mess. Here's what I would say, something that looks kind of normal. Okay. So this actually is a pretty good example here. So you can see within the context of the uptrend, you get a sell signal, you go back to the mean. Sell signal, go back to the mean. Sell signal, you go back to the mean. Sell signal, you go back to the mean. And in this case, you actually go down to the trailing 21-day lows. So that's what I mean by a sell signal. Sell signal doesn't mean, oh my God, it's a top. And then, of course, buy signal, yada, yada, yada. So at this point, I look at this as a shorting opportunity. But the real move was down to 21.50. We took that trade, and now we would have to get back up above. That's not too exciting there. Hold on just a second. So on the daily chart here, you can see we've come down to the moving average, right? If we drill down a little bit, let's see, on a 30-minute chart here. So if we drill down here on a 30-minute chart, we can see that, obviously there's a lot of congestion and stuff over here around 21.60, 65. I see something like this, and it's like, all right, this is just kind of this is where a Fibonacci tool comes into play. So a weak bounce gets rejected at the 382 retracement. A normal bounce goes to the 50. If for some reason we push up through the 618, then we're going to new highs. So that's how that works. All right, good stuff. Got a lot to cover in the premium video. You guys have a good night, and we'll see you at the next update.